Yes, my dear, one second. Yeah, hi. This is Ravi Kanth Miriyala. Today, as part of our quick revision of CA final, all the standards. As part of that, we are doing Ind AS 34 is first I will take up. That is interim financial reporting. And because it is Ind AS 34 revision will not take too much time, as you very well aware. Okay. And next, I'll start with Ind AS 33. Obviously, within 1 hour, 33 and 34 both cannot be completed. That's why after this class, with 15 minutes gap, I will be starting, part number 2 of Ind AS 33 once again. Okay, right. Yeah, before going to the main subject, a small information. Yeah, we are starting a new batch that is on financial reporting, which is going to be started from January 27th. Yes, January 27th, this is not September, January 27th, 2022. Okay, right. And it is going to happen in morning and evening, both only one batch, morning and evening, both the sessions, right? And morning 3 hours, evening 3 hours. We will be able to complete it entirely in 45 days. Yeah, but first 15 days, approximately 10 to 15 days, we'll be taking only morning class. And after 15 days, we will be taking both morning and evening sessions. Right, approximately if not 45, because of this first few days gap, it may take another 7-8 days extra, but I will be taking totally 270 hours to complete the entire syllabus. In this, I will be taking each and every point, almost every question from ICA material, mock test papers, RTP paper, previous examination questions, almost everything is going to be discussed in detail, and conceptually each and every point is going to be covered. Fine, right. So at the end of the class, I can ensure that you are going to learn, right, 100% concept plus and full preparation for your examination, right? The students who are going to appear in May attempt and even November 2022 attempt, these two students, these two attempts people also, everybody can join this course, right? At the same time, one more course, that is on GFRS. This is starting on 10th January. This is the old slide. Okay, 10th January we are starting this batch, GFRS. Okay, right. And this is only evening session, 6:30 to 9:30. It continues like that. Fine. Right, here also we'll be covering full ICA material, previous mock examinations, previous examination questions, everything is going to be in detail it's going to be considered. Next point is, what is that? We are going to take 25 classes, 25 into 3, that is 75 hours we are going to complete the entire syllabus. I'm very sure, after the classes you will be very happy with the subject, 100%, and I can 100% give you a guarantee you will get confidence in the subject. Okay, my dear. And one more information, yes, Unacademy has started a program, that is CA Iconic program. This is for CA final students, right? In this is Iconic program. It's a premium program, not like plus subscription. You will get more benefits actually. That is, one is doubt solving session. Yeah, doubt solving sessions. Whatever you will get a mentor. That mentor will be the first person to contact, right? He will clear your doubts. If he is not able to clear your doubts, he will direct it to us, that is the teachers, right? And he will help you in planning for your examination. Yeah, at the same time there is evaluated test series. For each paper there will be 3 examinations. One is when we are through with 40% of syllabus, one exam, 80% of syllabus another exam, 100% of syllabus one more exam. Like that you will be writing at home and you will be sending the copy. We will be evaluating your whatever you have written, and subsequently we'll have a discussion, right? Where are you lacking, where you need to develop, correct? For your growth we will be suggesting something, right? That will be obviously very much helpful to you and helpful for your plan to succeed this CA final exam. And a plus subscription student generally will not get the printed books, but this subscription, iconic subscription, people will be getting the printed material. Okay, that is the another additional advantage. Yes, evaluated test series, I told you 40, 80, 100 percentage, and we'll have a discussion over a phone. That obviously correct na? Will the expert will be giving you the feedback and everything. Right, this subscription, when you are subscribing to this iconic program, use the code YESHAS live, YESHASLIVE live, YESHASLIVE live, so that you will get 10% discount as well. And this is there for group 1, group 2, and combination of groups. If some student has taken group 1 only, group 2 only, or combination of group 1 plus group 2, you can use the same code, and this iconic program is there for both of them. Okay, yeah, this is about the our information. Chalo, let's start with. Now let us start with, first, as I told you, Ind AS 34. First I will be starting with. The reason Ind AS 34 is a small one, okay, which we can complete it just like that. Yep, 1 second. Ind AS 34. Yeah, see, Ind AS 34, interim financial reporting, IFR is my short form. See, interim financial reporting. Interim means what? It is for you are preparing the financial statements, okay, for less than 1 year period. That's all. This is less than for it is not for the full financially. It is only for the less than. It may be for quarterly also. You may be preparing for 6 months once also. It is not necessarily always quarterly financials. Not necessary. It can be even 6 months financial statements. That is one. Yeah, we are preparing a financial reporting, correct na? Right, first thing, what is that? Why are we prepare? Why do you need to prepare this interim financial reporting? See, you are giving the information as on 31st March 2021, okay, and the next information if you give after 1 year, 1 year time, 1 year gap is there, especially, correct na? 1 year gap, in this period of 1 year, what is happening with your company? The investors, the market has no idea, or maybe there may be some, what is that, rumors, there may be some nonsense information which may be going in and out, correct, because of which these people may take a wrong decision and it may lead to loss of the investors money. That's the reason, correct. If it is a listed company, mandatorily you are supposed to prepare financial statements quarterly. You are supposed to give the financial update. Preparation of interim is giving an update. Okay, suppose quarterly if I give financials means what? Yeah, what is the update for the first quarter? Correct, right? What is the update for the second quarter? It's always like that. Okay, right? So objective is to update the financial information from the last reporting to current reporting. You wanted to give the information to the users of financial statements so that they can take more transparent decisions, financial decisions, whether to hold the share, whether to correct. They take their relevant decisions. Got it? Right. So here, what is that here, sir? Interim financial statements means how do we prepare? Correct. First and foremost thing, my standard does not mandate any company, or you company should prepare quarterly, half yearly. No, the standard will never mandate any company when to prepare, what to prepare. First point to note, right? Second point is what? We don't mandate, but if the company has to prepare interim financial statement as per the maybe another act, or maybe that is their requirement. Suppose a banker has given a big loan, okay, some 5,000 crore, 10,000 crores loan is given by the banker. So in the loan agreement itself, they have told every quarterly you have to prepare financials and give it to me. Even though you are not a listed company, you are preparing. Why are you preparing? It is as required by the loan agreement. Correct. So that loan agreement is mandating you. When you are preparing such interim financial statements, then you please come and follow my standard. That's all. When you are preparing as per the law or as per the contract, as per any other reason, follow my standard, but we will not tell who should follow, who do not need to follow. Okay, next. Right, see, suppose sir I am preparing financial statements or interim financial statements, but in interim financial statements, I don't want to follow 100% of Ind AS 34, sir. Slightly I will follow, sir, or some 70% of Ind AS 34 I will follow, 30% I do not follow. That's your problem. If you don't want to follow, don't follow. I don't have any problem actually. Okay, but if you follow less than 100%, you got my point. If you follow less than 100%, never ever say in any of the financial reporting, any of the financial statements may don't quote Ind AS 34. That means what? If you want to say that our financial statements are in line with Ind AS 34, it has to be 100%. It has to be 100%. That is recognition, measurement, presentation, disclosure, everything should be in line with Ind AS 34. Then only you can say your financial statements are as per Ind AS 34. Otherwise, you don't have right to say that. This is one important point. Why so? Why so means, yeah, see, all these listed companies, as per the listing agreement, clause number 41, yeah, Indian listed companies are supposed to prepare quarterly financials. But listen, those financial statements are not in line with interim financial reporting actually, because their format, I mean the statement format procedure is not as required by Ind AS 34. That's why those companies, if you see any of the financial statements, interim financial results, basically they never quote saying that Ind AS 34 complied. No, it is not possible. They cannot. First and foremost important point is that. Okay, yeah, next, I mean, why is that, sir? I mean, because they have to follow SEBI regulations. As per the SEBI, whatever they have given the format, that format only they have to follow. They don't quote that they are in line with Ind AS 34, but actually their financial statements are, I mean, recognition, measurement, exactly what is said by Ind AS 34, same recognition, measurement are followed by these listed companies, that you remember. Okay, next, see, when you are preparing the interim financial statements, okay, you can give a financial statements of complete set, or you can give condensed set. Okay, what is complete set, what is condensed set? It is your option. Okay, complete set means what you prepare for the year end. That means full perfect proper balance sheet, proper profit and loss, yes, proper cash flow statement, SOCIE, that is statement of changes in equity, notes, everything in detailed information you are supposed to give it. Right, next, condensed set. Condensed set in the sense it's going to be small, I mean abridged information. Abridged in the sense we are not going to give detailed information. As I told you, this interim financial reporting is going to be a update. It is a financial update from the last reporting period to current date. That's why we don't need to give entire detailed notes. No, not required. Detailed breakup for each information, not required. Little information, and little means which will be useful for their decision making. That's all. That information only will be given. That's why just look at the information. Entity has an option to prepare this, either at using the complete set or condensed set. This is condensed set. Okay, yeah, if you say complete set, if you say it is a complete set, this is same as at the year end, correct? And it is going to be complete information, detailed information we are going to give it to them. And this is condensed set. It is a typing error. Okay, right, condensed set. Yeah, it is a condensed set. If it is a condensed set, what do? We will prepare condensed balance sheet, condensed P&L, condensed cash flow statement, changes in equity, and selected explanatory notes. We don't give the full notes. No, we do not give full notes. We will give only selected, which is relevant for their decision makings, for the user's decision making. Only that much information we are going to provide it. Okay, not the entire information going to be given to the users, right? And it is just an update. This is what I was talking about, that you have to keep it in mind. This is an update. Yeah, it includes what this balance sheet and P&L cash flows may. It includes the heading and subheading. That's it. Maximum heading, subheading. We are not going to give full bifurcation. Let's say example, trade receivables. That's all. Trade receivable one number. We don't give further correct less than 6 months, more than 6 months, correct. No, all that information we don't give. Minus provision for doubtful debts or allowance for doubtful debts. Sorry, we don't give that information. Why? Not required here. It is already deducted. Net number only will be given as a trade receivable. That's it. PPE. That's all. We'll tell one number. PPE minus accumulated depreciation. No, not even accumulated. Directly net number PPE is this much. We don't give the full table of correct gross block, net block. No, that information is not necessary. Right. At the same time, we'll give the present. We'll present basic and diluted EPS. Yes, this information also is supposed to be provided. Okay, right. And when I said selected explanatory notes, correct. Now, what is that, sir? Only significant events and transactions. Correct. Which are right. Some examples also are provided in this information. Okay, which are only required to understand the financial position, financial performance of the company during this interim. Okay, during this interim, this is happening. Right. All right, 1 second, sir. I'm in live class. You can say once. You can sit, but I cannot talk. Yeah. Examples are change in accounting policies, and its significant estimations. Okay. If there are change in accounting policies. Okay. Right. Just obviously that is not a small information that you are supposed to take it up. Right. Unusual item. If there are any unusual transactions or unusual items, yes, that's I told you, significant areas, significant matters. Okay, significant areas, significant matters are going to be given. Fine. And some more information. Suppose in the interim period, if you have given any interim dividend, yes, the dividend information you can give. Yes, segment information mandatorily. Yes, but it's not like so detailed segment information, right? Broad information, like what is the segment result, segment revenue, sales, not like one full page of information. Little abridged information only we are going to provide it. Right. Events occurring after the balance sheet date. Yeah, events occurring after the balance sheet date, which is material. Okay, that you are going to give it. Next, change in capital. Yes, change in the capital structure. I mean capital structure in the sense if you have issued any further new equity share capital, preference share capital. Okay, right. Or if you have taken any borrowings. Got my point? Yes, that information also, yes, obviously you are supposed to provide it. These are the just examples. This is not exhaustive data. This is a basic information. Whatever is important to the users, that we are supposed to decide it, that only is supposed to be provided to the users of financial statements. Okay, right. And next important subtopic is period of IFR. Correct. For which period of IFR? Right. See here, I am assuming the period is 30th September. Okay, 30th September. When I say 30th September 2019, assume my company is preparing quarterly financial statements. Quarterly preparation, we are doing it. Right. So under that circumstance, what do you do? Current period, you have to give current period and comparative period. Right. So what is the current period? Current period will give balance sheet. Balance sheet is, as you know, it is as on. Yes, balance sheet as on 30th 9 will provide. Correct. But comparative will be not 30th 9 2018, my dear. That is 31st March 2019. Just last year end, like last year end is 31st March 2019. Whether you are preparing it on 30th 6 2019 or 30th 9 2019 or 31st 12 2019, under all the circumstance, last balance sheet date information only is going to be comparative information. Okay, right. Next, profit and loss information. Here basically we are supposed to give two separate columns. Okay, first one is P&L for current interim period. That means which is for 3 months. 3 months in the sense, yeah, 3 months in the sense what? July, August, September. This 3 months information will provide. Means in these 3 months, what are your sales, what are your expenses will be given. Right. Next, current cumulative P&L. Cumulative P&L means 6 months. 6 months means what? From 1/4 to 30th 9. From 1/4 to 30th 9, whatever is your sales, everything is going to be given. Okay, that means Q1, Q2 cumulative information is going to be given. Yeah, here also same in the sense what? Here also for 3 months means what? 3 months means here also like July. Okay, July, August, September. July, August, September of 2018 you are supposed to take it up. Fine. And here also what? 1/4/2018 to 1/4/2018 to 30th 9 2018 you can take it up. 1/4/2018 to 30th 9 2018 you can take it up. Got it? Right. P&L for 12 months. This is the third situation which is seasonal. This is applicable for only seasonal business companies. If your company is into seasonal business, okay, sir, my sales are only seasonal, sir. Okay, in this, I mean, say, in 3 months only I will have more income. Balance 9 months will have light income, sir. Okay, such kind of business, like say cracker business, something like hotel business, maybe in what is that, like say example Kodaikanal, Ooty, such kind of places, that business will be seasonal. You cannot expect. It's not that no customers will be there, but customers will be there, but customers will be packed during some particular season. Okay, right. If it is a seasonal business, if you are running, then this information, the first two columns information you have to provide. In addition to that, the third information also you are supposed to provide. Okay, what is third information? Full 12 months information. 12 months information means, observe, from October, that means 1st October 2018 to 30th 9 2019 tak you are supposed to give. And comparative also want 1/10/2017 to 30th 9 2018 tak. Exactly last 1 year, 12 months information, comparable 12 months information you are supposed to provide it. Okay, 12 months information you are supposed to provide it. That will be more and more useful. Got it? Next, statement of changes in equity. Statement of changes equity, current financial year to date. Year to date in the sense what? From 1/4/2019, from 1/4/2019 to 30th 9 2019. Okay, the same way here also 1/4/2018 to 30th 9 2018, like 6 months cumulative information from 1/4 year to date. Okay, from the beginning of the year to the date of balance sheet you are supposed to give the information. Next, cash flow statement. Yeah, cash flow statement here also obviously year to date. Year to date means same information. 1/4/2019 to 30th 9 2019. That is 6 months data. 6 months data you are supposed to provide. At the same time, if it is seasonal, then second line is important. Then you have to prepare, because you have prepared already P&L for the 12 months. Then you have to provide cash flow also for 12 months information. Okay, 12 months information you are supposed to provide. Compare period for 12. Correct na? 12 months information you are supposed to. 12 months information you are supposed to provide. Done. Right. Now let's look at the next and foremost very important information. See, recognition and measurement. Yeah. See, in the examination also, recently in this, December 2021, they asked some question, maybe some 4 to 6 marks question. I don't remember exactly how many marks. Maybe 4 marks or 5 marks or 6 marks. Okay, right. They have asked a question, but see, that question, that was not actually difficult. It is easy, right? But the point is, they always try to confuse you, or they always try to throw a biscuit on us. Okay, saying that, so this is seasonal company, something like that. My dear, for your information, with respect to recognition and measurement, actually there are no differences. If you are preparing for the year end, what all the rules and regulations you are supposed to follow, same rule and regulation, I mean, for with respect to recognition and measurement, correct, you have to follow even if you are preparing financial statements for 3 months or 6 months or whatever, less than interim period financial statement. Same definition of asset, same liability, income, expense, at the same time same conditions to recognize, everything will be same. All the rules and regulations are going to be same and same. That is first and foremost important. Okay, right. Use the same accounting policies of previous year. Yes, obviously, generally. Does it mean that I cannot change accounting policy? No, no, my dear. You always can change. But as you know, when it is required by the Ind AS, correct? Or when it makes more reliable presentation, when it leads to the change leads to more reliable information, more reliable information presentation, and then obviously you can change the accounting policy. But here again, if you are changing the accounting policy, retrospective presentation you are supposed to do. What are you supposed to do? Retrospective presentation. That is, retrospectively you are supposed to do it. And one more important point, retrospectively you are supposed to do, but you don't need to give 3 balance sheets. This is by mistake I have written here. Okay, right. 3 balance sheets are required only with respect to final year. I mean year end के लिए 3 balance sheets are required, but not for interim. If you are changing, 3 balance sheets are not required. That is very clearly given under Ind AS 8. Okay, right. So it's very clear. You don't need to bother about it. When there is a change in accounting policy, retrospectively will apply it without doubt, but you don't need to prepare 3rd balance sheet. Yeah, balance sheets whatever I have given on the top, that much current year, previous year information, if you provide it, that is more than sufficient. Okay, right. Yeah, next thing, same conditions of recognition of asset, liability, equity, income, expense should be followed. That I told you already. Right. No rules for seasonal business. That is what. Yeah, he will tell something like that. Sir, dividend income, sir. Dividend income, I'm getting dividend income, more income in the first quarter, sir. And subsequently, you understand, next quarter 2, quarter 3, quarter 2, quarter 3, quarter 4 may actually you don't get any dividend, no dividend income, sir. That's why I want to spread this. Right. These are all I told you, biscuits. Okay. Why, sir? If this quarter itself is 1 year, if you assume, just example, if the quarter itself is this 1 year, what do? Will you defer the dividend income to the next quarters or next years? Will you defer it? No, sir, I will not defer it. So when you say I will not defer it, then obviously the same rule is applicable even if it is interim financial reporting. Even if it is interim, whatever, if you can defer it, you understand, if you can defer it as on 31st March, then you can defer even on 30th September or 30th 6. If you can't defer it as on 31st March, I mean for the year-end financial preparation, then you cannot do even here also. Getting my point? Right. That is the foremost important matter. Next, apply estimations, materiality, and as usual, yes, whatever you apply it for the complete set financial statements, the same thing you apply it. There is no new change accounting, no new rules, no new, everything, all your standards, all Ind AS are supposed to be followed in the normal fashion, right? And one more thing, just a second, I'll take this to explain. Right, this one, see, what do I say? Yeah, this is with respect to tax. Which tax? Income tax. Yeah, this is with respect to tax, income tax. With respect to income tax expense. Sir, income tax expense, how do you recognize it? Yeah, see, for this we have some small steps. Just a second. Yeah. So for this, what is there? What is there means, I'll say like this. Just a second. Yeah, see, first step 1, I say step 1, step 1, step 2, step 3, something like that. Yeah, so what do you do here in this? First, you have to estimate it. Yeah, it is an estimation. Estimate annual income. Yes, estimate annual income. What is your profit? This is profit before tax for the full financial year. Yes, for the full year, annual. That is what you are supposed to do. Estimation is there in this question. Okay, you have to estimate it. That is one. Right. Next, step number 2. Yeah, for this PBT, what is the taxable income? Right. What is the taxable income? And what is the tax liability? That your tax liability. Yeah, taxable income and tax liability you are supposed to determine. Okay, right. What do you do? Taxable income means, yes, we obviously start with PBT, some XX number. Then you will say add back the depreciation minus, you will say tax depreciation, that is section 32. That number you will, this you will say plus, this you will say minus. Correct. Something will be allowable, something will be disallowed, something like that. Then you will get taxable income. Correct. On that you will apply your 30% and your surcharge, your cess, everything you will apply. Then you will get tax liability. That's it. Then what do you do, sir? Then this step 2 number, let me say, yeah, you answer whatever comes, that is A. You answer whatever comes, this is B. Then what are you supposed to do? Then you are going to calculate percentage. This is only weighted average tax rate. Weighted average tax rate. Okay. Yeah. So percentage means what do you do? That is B by A into 100 you are going to apply. Yeah, you will end up something like, say, 20%, something will come. 20% you will be applying it on quarter 1. Suppose say quarter 1, quarter 2. Yeah, quarter 1, what is my profit before tax? Suppose 100k. Then we will say directly this is equal to, what is your tax expenditure? Tax expenditure is equal to into 20%, that is equal to 20. Sir, this is equal to 250, sir. 250 into 20% is equal to 50. This is your tax expenditure. Which tax expenditure, sir? This is same current tax expense. This is, sir, but what about the deferred taxation? Yes, deferred taxation also in the same fashion. Yeah, in the same fashion. In the sense, right? What will be the deferred tax? Correct. Now, what will be the deferred tax amount? Deferred tax. What is your deferred tax expenditure for the current year? That you calculate. That same thing, like your taxable income, already we know it. Yeah, what is the deferred tax you will get for the full year? Yeah, the same information. Again, the percentage for current tax percentage may be 20%. You got deferred tax, you may get 10%. Something, just example I am telling. Yeah, same rate 10% you are supposed to apply it on deferred tax also. But here, yeah, you should be bit careful whenever there is a deferred taxation, right? Yeah, because deferred taxation, say what will happen, deferred taxation, say what will happen. Suppose, say example, yeah, in the previous year we made losses. Yeah, we made losses. We had reasonable, virtual certainty, not reasonable certainty. We had virtual certainty that we are going to make future taxable profits. That way we recognize DTA. Yeah, you recognize the DTA means what? You must have recognized a deferred tax asset account debit to, correct, na? Deferred tax income. Okay, some 10 rupees like that you must have already recognized in the last year. Correct. But in the current year, suppose losses were how much, sir? Losses were 100. Example, losses were 100. Let me say 30%. So 30 you have recognized. Correct. So in the current year you have got profits. Okay, how much is the profits? I got 250 rupees profit I have got. Very good. That means you must have offset with the profits. Correct. You must have offset with the profits. Then you will be paying tax on this amount. Correct. Na? You will be paying tax on this amount only, you will be paying. Agree? Right. Under that circumstance, just think of, you have already utilized this 100. Correct. Na? Right. So that's why this entry which you have recognized in the previous year is going to be reversed now. Yes, because utilization, I don't have any more tax losses which can be carried forward. I don't have any tax losses because I have already offset this. I already offset it. That's why I cannot carry forward anything to the next year. Correct. True, that is. That's the reason reversal entry means what will happen. Deferred tax expenditure account debit. Correct. Na? Deferred tax expense account debit to deferred tax asset. So that same 30/30 will be out. Now remember, E30 is going to become deferred tax expense. Yes, this is going to hit current year profit and loss. Right. It is just because you utilized the previous year deferred tax asset, it is reversed in the current year. E expense also will come. This is in addition to the current year any other differences, temporary differences arising, that may be deductible or taxable temporary difference arising, right? This number is in addition to, but actually if you do one sum, then only you will get to know. Just remember, we are reversing a deferred tax asset. That information, if you can remember, your half job is done. Okay, these are all the few things. And one more with respect to tax. Okay, with respect to tax expenditure. Okay, suppose if it is a business income, yeah, if it is a business income, yeah, business income rate is equal to 30% applicable to my company, then yes, apply 30% only apply. But there is some capital gains, sir. Okay, for capital gain we have a separate rate, sir. 25, 20%, sir, 15%, sir, 5%, something specific rate, a special rate is there, sir. Then apply that special rate only. Don't apply, it's not necessary that you are supposed, it is not necessary that you are supposed to apply average for this. No, your total income, suppose your total taxable income, yes, example, your total taxable income is equal to, right, it is equal to say 100 may 70 rupees is business income, 30 rupees is capital gain rate separately apply, this rate separately apply. That is first and for one more small point. Yeah, next point. Yeah, next point to consider. What is the next point? Listen carefully. This is rarely possible in the country, but the situation is there, and with respect to this ICA material, my questions are also there. That's why I just thought of covering it up. See, I am following current financial year. Okay, what is my financial year? Let me say I am following from January to December. January to December I am following. Correct. But income tax purpose, but your income tax purpose, you will be using which financial year? Your income tax purpose you will be using April to March. Correct, na? April to March you will be using, right? So now what will happen? Your Jan to December financial year, mein, January to December, correct, na? So that is say January 2022, okay, to December 2022. In this time, what is happening? You are under assessment, correct, na? Financial year, I mean, for the tax purpose, you are under assessment year 2022-23. This is the assessment year. But for April to December tak, this will be assessment year will be 2023 to 24. Aren't you falling in two different assessment years? Yes. Now what should I do? Now you have to apply separate weighted average rate, weighted average tax rate. You have to apply separate weighted average for this last quarter. This is the last fourth quarter, separate rate, and for this quarter number 1, quarter number 2, quarter number 3, separate rate only supposed to be taken up. Okay, you cannot follow for the full financial year one rate. Yeah, you have to calculate separate percentage. What is the taxable, I mean, what is the profit before tax? That is step number 1, step number 2, step number 3. All these 3 steps you are supposed to calculate for this assessment year separately, for the next assessment year separately. Accordingly, what percentage comes, that percentage only you are supposed to apply it. Got it? That's all, my dear. This is all about your Ind AS 34 interim financial reporting, a quick revision. Okay, right. Now let us get into Ind AS